I'm here to speak to you about our upcoming NFO, the Sundaram Bluechip Fund, which launches on the 17th of September, right? So I thought I'll give you a bit of context as to the why I'm launching this fund at this point in time, right? So as you're aware, it is a large cap diversified product. So large cap funds are, in our view, a key component of any investor's portfolio. The reason for those which are known very well to all of you, but I'd like to reiterate it at this point in time, is the fact that large caps are large companies and hence more stable during business cycles, have got a greater competitive advantage, can acquire smaller companies and withstand the volatility in the market much better than mid caps and small caps. At any point in time, since we don't know what the future is going to look like because we get black swan events like the COVID crisis or economies go through business cycles, large caps always have a tendency to outperform when things are bad. And it's not as if when things are booming that they underperform from a customer's investment portfolio perspective. So as you are aware that when the market goes through business cycles which are favorable, which are otherwise known as virtuous cycles, small caps tend to do better than mid caps and mid caps tend to do better than large caps. But even in such situations where the economy is booming, large caps have delivered healthy double-digit returns, which combined with the equity taxation benefit gives you more than double the returns that you would get from alternative investment avenues like fixed deposits, etc. So large caps may deliver less than the maximum returns that a small and mid cap delivers in a good cycle, but still deliver healthy returns. So first thing is that every investor should have a portion of large caps in their portfolio. Now, obviously, the amount of large caps can vary in the portfolio based on the business and economic outlook. For example, if you are going through a bad cycle, as we seem to be doing ever since the coronavirus came in, but before that itself, our economy was in a downturn, we saw that large caps have tended to do better in terms of earnings. If you have seen the earnings charts for the last year, the last quarter, and this quarter, you would have seen that clearly large cap performance in the earnings season has been better than mid and small caps. Right? Now, in the context of the current scenario, right, what should be the component of large caps, right? So basically, when I look at it from an asset allocation perspective, what I would say is that for aggressive investors, right, you can look at a 50% component of large caps. For moderate investors, you can look at 70% in large caps. And for conservative investors, I would suggest a 80% large cap investment. Now, the reason for saying this is the volatility that lies ahead of us in the current situation. What are the components of this volatility? The first is the damage to the economy from the COVID crisis and the lockdown. Right? The second is the fact that while we got initial success in terms of the controlling the virus spread from urban to rural areas, now we are seeing that the rural area, the virus penetration has been rapidly increasing. So what it holds for the future, fresh lockdowns, or is going to hurt consumption sentiment in rural India, are some things that we wait and watch. At the same time, the world's biggest economy, the US economy, is preparing for its next election. And historically, we have seen that the pre-election period has always been a very volatile period. And in such times when money flows out of risk assets, large caps still suffer less outflows as compared to mid and small cap. So that's the second reason for the uncertainty. The third is that a recovery in the form of a vaccine or a cure for the virus itself, there are lots of news reports of that happening, but at the same time, some tests fail. So I think we have to give ourselves a little bit of time over the next maybe 6 to 9 months for a vaccine or a cure to be discovered, it to be tested in humans, to be tested for side effects, and then to implement. So a solid recovery for the Indian economy coming out of a COVID crisis, as the world also comes out of it, is going to take a bit of time. And while the long-term opportunities in terms of the business from China to shift to India, given the structural advantage, are present, it is something that will take time to implement and activate at the ground level. And hence, for the next 12, 18 months, clearly the economy is going to be just in a recovery mode from the recession. and maybe a year and a half later is when you will see the economy come back on a strong growth path. So 18 months later would be a good time to revisit the portfolio. But at the current moment, like I said, roughly a 50 for an aggressive investor, a 70% for a moderate investor, and an 80% for a conservative investor is what I would recommend. And bearing in mind that large caps also get the benefit of liquidity flows from FIIs. While there could be short-term fluctuations in that because of the US elections, in the longer term, India has always been a market which is attractive to FIIs. Indian markets valuations have always traded at a premium to other emerging markets and to the world markets. Hence, the continuing supply of liquidity is another factor that even in volatile economic times, large caps get a base support of liquidity coming in, and India's attractiveness, given the demographic dividend, given the China opportunity, are something that will ensure that long-term FII money, the pension funds, the sovereign wealth funds, will always have a significant allocation to India. So large cap carry that safety element that there is always a liquidity support. And supporting this is the fact that even the domestic mutual fund industry, the equity component of which is about 10 lakh crores, has almost about 70% of its exposure into large cap stocks. So even when FIIs display certain volatile tendencies, you will find that domestic mutual funds always have adequate cash to shift their large cap portfolio and buy what the FIIs are selling. So this outlook for the next 12, 18 months, backed by these factors, encourages me to say that this is a very good time to increase the component of large caps in your overall asset allocation. That sets the table for the launch of our NFO, which is a diversified 45 to 50 stock portfolio benchmarked against the Nifty 100, right? So the fund manager is essentially going to choose 45 to 50 stocks out of a 100 stock index and maybe take about 10 to 20% in mid caps as and when he sees the recovery really go underway. So what is the blue chip fund all about? So the blue chip fund with a diversified large cap is essentially saying that we will choose quality companies. And the advantage of choosing quality is well demonstrated when we took out a list of blue chip named funds in the industry, which are about a quarter of the industry's funds. We looked at their performance and we found that the name blue chip, meaning that they choose quality as a filter, has consistently delivered better returns than the category average for large cap as well as the BSE 100 index. So blue chip as a filter for quality, quality as a filter is recognized by the stock market, seems to be well established, and that's the approach of Sundaram that we will take in choosing the portfolio for this fund. The second aspect of the fund is the fact that Sundaram has over the period of time been building a very, very strong track record in large caps. So that's something I'd like to throw a light upon because it is not something that has happened by chance, but by design. Because as you are well aware, our establishment 2 decades ago led to the launch of our flagship Sundaram Select Mid Cap in the year 2002. But at the same time, we had also launched a concentrated large cap, namely Sundaram Select Focus. So we ran that as a concentrated high risk, high reward fund. So given the volatilities in the market, it had been through its up and down, especially post the global financial crisis. While we consistently delivered alpha in terms of our mid cap fund, the small cap fund, and over the micro cap funds over a period of time, and build a brand name for innovation with the launch of our sectoral funds, the latest of which was the services fund, preceded by the rural fund, preceded by the capital goods fund called the CapEx Opportunities Fund. A number of funds from us on the sectoral and thematic side have been industry first and have delivered very good returns in the first few years of their establishment. So over a period of time, while we were building our strength around the niche segment of mid, small, and micro caps, as well as sectoral themes, we realized that customer base, all of you have been very supportive of this journey and have helped us build a 1.8 million strong customer base. Now, the key thing here is that as a customer base, they have been loyal to us. They have stuck with us through the volatility of the mid and small cap seasons. But we felt that we owe it to this customer base to give them a much more stable, less volatile investment experience with Sundaram. So with that context, a few years ago, we took a serious look at our large cap funds, that is Select Focus, looked at the reasons its performance was volatile. Part of it was concentrated because of the concentrated portfolio, part of it because of the high risk, high reward management style. And then we realized that perhaps we need a different mindset to be created. And so one of the first steps that we did in this is to set up a equity desk in Mumbai. As you know, otherwise, myself and the equity team sit in Chennai. For the purpose of managing large caps, we felt that a Mumbai-based experience, which was different. So first thing that was an admission from us that we probably need to look at large caps in a very different light, how it is managed. And by setting it up in Mumbai, which is the financial capital, with all the brokers, the FIIs being there, the ability to look at what they are doing and manage actively a large cap portfolio, a significant decision was taken to house about two analysts and a fund manager in Mumbai. Parallelly, we also felt the need for fresh blood and experience from a person who's been managing large caps in their life. And so from the insurance industry, which is essentially a large cap industry, we have hired in September 2016 a very experienced fund manager by name Rahul Baijal. And we then handed over our large cap oriented funds, which is Select Focus, then our balanced fund, which was then called balanced, now called equity hybrid, and our banking sector fund called financial services opportunities to Rahul Baijal to manage, right? So Rahul, who came on board in September 2016, has taken it upon himself dedicatedly to look at the large cap component. So all of these three funds have significant 70 to 80 to 90% large caps. And over this period, from September 16 to now, almost a 4-year period, Rahul Baijal has demonstrated impeccable credentials in terms of taking up both the Select Focus Fund from a 1-star value research rating to a current 5-star value research rating, and has been consistently in quartile 1 and very often in the top 10 funds in the industry. So this is one testament to his ability to manage large caps. The second is demonstrated in the fact of the balanced fund, which again was at a very low value research rating in 2016-17. And that fund, with a consistent diversified portfolio, which is also 75% large caps, he has brought up that fund also to a 4-star value research ranking today. So that is the second way that he has demonstrated his large cap skills. In the journey along this way, we also identified services as an opportunity, as you're aware, and 2 years ago, we launched the services fund under his guidance. And so he manages the services fund, which also has delivered something like 8% return over the last 2 years annualized, as opposed to just 1.8% of the index. So clearly, he has done that very well too, with about a 55 to 60% large cap component. So this large cap focus that we have developed over the period of the last 4 to 5 years has also spilled over to other multi-cap funds managed by other fund managers in our fund house. So as you may be aware, our large and mid-cap fund, Sundaram Large and Mid-Cap Fund, is also been by and large a quartile 1, quartile 2 performer, and is a 4-star value research fund. And our recent equity fund, which is the multi-cap fund, is also been a quartile 2 performer in the 3 to 6 months that it's been launched. So as you can see through these statements that I've made, we have made a conscious effort to do 3 things. First is to create a separate environment for managing large caps out of our Mumbai desk. Second is to hire a person with large cap experience and give the funds that we have large cap orientation to him to improve the performance, and the proof of the pudding is in the eating in terms of what numbers I've already given you. The third aspect is to broaden our portfolio itself and to launch and add more multi-cap and large cap funds to the bouquet, right? So we launched equity multi-cap fund 6 months ago. We launched a balance advantage where the equity is also multi-cap 3 months ago. So consciously our effort has been that to the investor population who are trusting their hard-earned wealth with us, we'd like to give them a more rounded and balanced risk-reward experience. So there are our mid-cap and small-cap funds which will do well when the economy does well, and there are our multi-cap funds which will try and get the best of both worlds, and then we want to have the good quality large-cap funds which can do well in troubled times. So with the help of advisors like you, you can shift the asset allocation of a potential or existing investor in the ratios that I mentioned, right? As a 50, 30, 20 large, mid, small for an aggressive investor to an 80, 20 large and mid exposure for a conservative investor. We'd like to offer the option to our investors to build an entire asset allocation within the Sundaram stable so that his investment experience in Sundaram always carries the blend that given the situation of the business cycle, given the situation of volatility, there is always some fund which is delivering decent returns to him. So idea is to get our customer base to have a wholesome investment experience with us. And as a partner, we'd also like you to experience that in its fullness. So my request to you is that in this journey, right? I think we have come to you after building our credentials with our large cap product. Obviously, over a period of time, we like to see these as our flagship products, right? And the emphasis on quality, which has been a constant at Sundaram, is clearly expressed in naming this fund as the Blue Chip Fund. So my earnest request to all of you is that please look at this fund as a key and core component of an addition to an existing Sundaram mutual investor where you've already given them an exposure to our mid cap and our small cap and our other funds. I think it's a key addition, and I think adding this to the portfolio will definitely add value to the investor's experience with us. At the same time, you have been very supportive of us when giving us a very healthy 7 to 8% market share of the mid and small cap space and of the sectoral thematic space, recognizing our skills there. Now that our large cap skills are also out in the open, with this NFO, I can make a request to you that even to those investors where you have not exposed them to Sundaram, because in your mind, those are investors of a more conservative nature, may not be suitable to a mid and small oriented exposure or to a thematic sectoral exposure, you can kindly look at them also to take an investment in this fund, because this fund being lower on the risk reward framework with the stability of quality added to its portfolio is something that definitely they will have an enriched investing experience with us. With that, with those few words, I strongly recommend this fund to add to your existing Sundaram Mutual investors portfolio and to new investors to Sundaram also. We have done a lot of work over the last year in enhancing our digital capabilities. And I'd like to end by speaking a little bit about where we are in that journey. So as you know, over the last year, we went through a change of registrar to KFinTech. And as the feedback from all of you came through, that KFinTech is definitely technologically and digitally quite an efficient and capable player that played a part in our decision making. And we are happy to announce today that we now have a full-fledged distributor initiated transaction, DIT platform, available for you to execute it at our end. Secondly, right, we've also developed the capability to have a digital execution, both in terms of e-match, both in terms of coming to our website and executing through that process and doing a new KYC through the eKYC mode. So digitally, the investment experience has definitely much more enhanced. And in these times of the pandemic, I think the digital part is a key element which we hope will be of support to you. And we are happy to send you links which will do a very clean and neat straight through processing of the customer by just clicking a link, and our sales team will be reaching out to you with the offer of giving those links. And we are happy to extend this service even to customers who are not with Sundaram, where we will need to go through an onboarding process at our end, but happy to support you in that process and help you to get new customers also to the Sundaram investment universe, right? At the same time, digital is not just about execution, digital is also about marketing. So what we have done is that we are also creating videos and one-pagers and key selling points. Those kind of podcasts and voice casts are being generated by our marketing team. Feel free to take those and use that to market to new investors, including this video is going to be made available to you. You can look at it and use the relevant points from it to speak to your customers. We are also trying to support the element of the push from your end to the investor to invest with a pull factor by creating a massive digital visibility for this NFO. So there is going to be a multi-pronged approach to that. While the traditional newspaper, the leading newspapers of some regions as well as the nationwide will carry the ads to announce the launch, we are aware that in a pandemic situation and the lockdown, lots of customers are at home surfing digitally and watching television. So given that we have a big major cricketing event in the IPL happening at the time of the NFO, we will be doing television visibility also, and we will also be doing a digital visibility to all the digital channels. So I'm sure that we are going to help you in that with making your customer aware of this product. And to round off, I'd like to tell you that we have chosen a very powerful creative, which in just one image conveys the strength of this fund to your investors. Namely, we've chosen a sumo wrestler. For those of you familiar with sumo wrestling, you realize that the wrestlers are large in size. And this size matters. So the key word, that phrase that we are using to position this fund is size matters. At the same time, the sumo wrestler, despite being large in size, carries two other elements. First is of enormous flexibility. So if you have seen a sumo bout, you will realize that it's amazing agility and flexibility that the wrestler brings to win the bout. That again speaks of the flexibility and agility of our large cap companies. And finally, as you know, size also gives stability. So the sumo wrestlers have very low centers of gravity, are able to stand like a rock in the fight. So I think that's also something that is very allegorical in terms of the large cap companies, that they're able to withstand the shocks and the business cycle downturns and come out winners. So this video, which will be publicizing, I'm happy if you would like, when the NFO opens, to have it circulated by you to your potential investors, so that in one simple image and a video, you can make the point about the fund very effectively to them, right? So thanking you very much for patiently listening to me and seeking all your support to make this NFO a resounding success. And I'm sure in years from now, this will be one of those funds which will deliver a lot of joy and happiness both to you and to your investors. Thanking you. All the best.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.